In today's episode, I'm excited to be talking with Dr. Kate Gress. Dr. Kate is a chiropractor, entrepreneur, and real estate investor with over 26 years of experience as a business owner and leader. She's built wealth through thriving chiropractic practices and real estate, starting with commercial office spaces and then growing to focus on large apartment complexes, all while running a family wellness practice. So passionate about empowering others, Kate helps chiropractors diversify through passive real estate investing to achieve financial freedom and security. Welcome, Dr. Kate.
Hi, thanks for having me.
Absolutely. I'm excited. Do you mind starting just, maybe sharing your story and why you even do what you do?
Sure. So my story is, like you said, I'm a chiropractor. I've been practicing for 26 years. I've had a practice for that length of time. And I also do real estate investing. I started that about 23 years ago and have become more active in the real estate realm and I guess maybe less active in chiropractic. However, I still own a practice. I just do not see patients any longer.
You referred to yourself as a multifamily real estate syndicator. Can you explain what syndicator means in that respect and maybe what you do differently or makes you unique compared to others when it comes to real estate investing?
Sure. So real estate syndications, what we do, I am part of an active team that invests in real estate. So we do all of the work, myself and my team, to basically find the markets, to find the properties, to underwrite the properties, to get the financing, to, manage the property managers, go through that whole cycle. And we bring in passive investors to partner with us in those deals to share in the profits. That's basically what a syndication is.
Oh, okay. It's a term I had never used before or heard before. So tell me, what do you find most exciting about real estate syndication?
Exciting about it, I guess, from my aspect, I love to be busy. I love to work. I love the business part of it and just having the business background. It was kind of came natural for me. But I think what's really unique about syndications is that passive investors can actually invest in real estate where it's truly passive. A lot of people hear about real estate and they think, oh, that's a good way to have passive income. I'll own some, single family rentals or some smaller, maybe multifamily or duplexes, and I don't have to do much work for it. And it's just cash flows and that's all good. But it's really not passive. There's a lot of work that's still involved in that. Where with the syndication, if you get involved in that as a passive investor, it really truly is passive. You don't do any of the work. You don't deal with the tenants, the toilets, the trash, any of that. That's what your active general partnership team does, the GP team, they call it. And the passive investors are just the limited partners. So they can keep doing what they do best, whether that's chiropractic or whatever they do, or maybe just retire and travel and do whatever they want and invest in real estate and have us do all the work while they make the money.
Yeah, it's mailbox money, right? Isn't that the right term?
Yeah. Yep. Mm-hmm. Cash flow along the way.
Love it. Especially the not fixing toilets part.
Right. And I've done that part too. And it's not all passive. There's a lot of work involved with that.
For sure. So you're not actively involved in a practice, but obviously you were. Do you mind sharing what were some of the biggest mindset shifts you had to make when when you started stepping into that CEO role, if you will?
Right. Well, I still do have a practice, just to be clear. I do not see patients myself. So I have associates that see the patients. But kind of going back to what was the original question?
Some of the biggest mindset shifts that you had to make for yourself.
Oh, the mindset. Yeah. Mm-hmm. To step into that role. Basically, having good systems and procedures was important, which I had because, I had seen patients for a number of years. So we had that down. Delegating is a big thing and making sure you can trust your team members, having the right people on the bus, of course, having a solid team, giving them autonomy, yet holding them accountable. I think, having them report back with their stats and their departments. So just holding them accountable for what they're doing and, just leading them as far as keep telling the story, not just to the patients, but to the staff and the team. And, being grounded in your philosophy in chiropractic so that they feel that sense of purpose and connecting them to that mission that you have in your office.
All right. So when you started on that journey, because I imagine it was a long journey, did you just wake up and say, like, this is like it's all about real estate investing, I want to get out of here? Or like, what spawned you to kind of like go down that road?
So when early on in practice, like I said, 23 years ago, I built a commercial building to house my practice and had some rental space that I built in that building as well, knowing that real estate was one of the things I wanted to do to build wealth, and thought that I would continue doing real estate, which I kind of put a hold on that for a while, but then ended up eventually going back to it. And I knew that I wanted to eventually sell my practice and basically retire from chiropractic in some manner, I guess. But knowing that real estate could be a good exit strategy and a retirement plan. So I just kind of started creating that for myself and for the practice, and hiring associates that I knew could handle, the patients, and building the practice to the point where, I knew I could step away and not be involved in everyday, day-to-day procedures. And then hiring an associate that wanted to eventually buy me out. So one of my associates has been with me for 11 years, and that is the plan. She'll be buying my practice in 2026. So that's kind of the exit strategy.
Wow. So you really are on that road to exiting the practice.
Yeah. Yep. And then I'll go full into real estate at that time, which I'm pretty much full-time anyway, but I guess I have 2 full-time jobs.
So what would you say to a chiropractor who's nervous about, maybe giving up some control and letting others take on more of that responsibility?
You just have to do it. You just have to know and trust in the procedures and what you've built. I think knowing that you have those solid procedures and you have the right people on the bus again, and you just have to put your trust in those people and just kind of step away if that's what you want to do. I mean, some chiropractors love adjusting and that's all they want to do, right? Which, that's fine. But if you don't and you want more, time freedom, then, building a solid team that you can trust.
Nice. Well, what would you say to whether a person, has gotten to that point where they're taking a little bit more of a step back, or maybe they're still actively involved, or just curious, can you walk us through maybe what passive real estate investing actually looks like for a busy chiropractor?
Sure. So, there's multiple ways to invest in real estate. So like we said before, you can kind of do the more active route and you can deal with the toilets, trash, and tenants, or you can do the passive route and invest in other people's deals. So kind of up to you what you want to do. As far as someone who wants to maintain a busy practice and they don't want to step away from that and they don't want distractions from their practice, the distractions of real estate, then I think passive investing is a great way to go. Let someone else deal with that, someone you trust, the general partner team, the sponsorship team, and let them do the work of the real estate while you are able to make your money work for you, investing in other people's deals.
Yeah, I like that a lot. And the other day you told me about being able to use even like self-directed IRAs to invest in real estate. What are some other actionable insights or tips that you could share with our chiropractic community who may not even know what they don't know about real estate syndication?
Sure. So I think some people think, oh, I need to have a lot of money to invest in real estate. I can't, whether it's, big apartment complexes, multifamily, or it's parking structures, or it's hotels, whatever it might be. Most people get into that through syndications. So they can be part of that by passive investing.
So I think when a lot of, or maybe it's just me, but I think when a lot of people think about real estate investing, what comes to mind is like just either flipping, right? Buy, fix it up, sell, or rent it out, and then you're fixing toilets. And so the idea of having some other, syndication, I guess, handle all of that for you. But, I think some of the things you just mentioned, like parking lots and multifamily buildings, may not enter a lot of people's minds when they even think about real estate investing.
Right. I think, a lot of people have never even heard the term syndication. I mean, it took me a while to even hear that myself and realize what it was, until a few years ago. I'm like, what? Syndications? What do they do? And then I became a passive investor myself and started learning more about that. But I had the background from the smaller multifamily and single family. But kind of going back to the question you had asked me before and talking about self-directed IRAs and how people can get into investing, without a lot of money, they can use self-directed IRAs. So it doesn't have to be cash. They don't have to be sitting on this huge pile of cash in order to buy properties. So self-directed IRAs, some people might have money sitting like dead equity in real estate that they own now, maybe on their house or maybe a vacation home or some sort of property or land that has equity built up that's sitting there doing nothing for them. They can use that to invest. So there's different ways to do it. And depending on the offering or the deal, there's different amounts, minimum investment amounts. So, again, you don't have to have hundreds of thousands of dollars or millions to buy real estate.
Yeah, I imagine that holds a lot of people back too, is thinking like, oh, they've got to build up like this, nest egg or this big lump sum to even get started. But as you've shown me, there's actually much quicker and easier and I guess faster ways to get invested than saving it up.
Right.
So what are maybe some of the common challenges that your chiropractor or other clients might face when it comes to this?
When it comes to investing in syndications or real estate
or either or.
Yeah. So kind of like we said before, just in general with real estate, some of the challenges, if you're doing it on your own, just dealing with all the day-to-day stuff. But in syndications, challenges, what you want to look for is basically a good team, sponsorship team. So really doing your due diligence, finding out what markets you want to be in. I think even though your general partnership team, the sponsorship team, they're doing their research. They're looking at the markets that are good. Hopefully they should be. But again, do your own research. What markets do you intrigue you or do you want to be in? And is that aligning with, the general partnership team and where they're looking? And then just vetting those team members and making sure that you can trust that sponsorship team and they know what they're doing and they have the experience. So those are some of the things we tell people. You just kind of have to be aware of when you're passively investing because you're putting your money in other people's deals and it's, out of your hands. You're not the one in control of it, really.
How do you see things progressing in the near future for real estate investing or perhaps even in syndications?
In general, like the market?
Yeah.
Right now is a really good time to invest with the market. I think there's a lot of deals out there right now. The markets go in cycles. And right now we're in a good cycle. There's a lot of deals. There's a lot of people and syndicators that had bought properties in the past few years and they got debt at a low rate. A lot of times they had like a bridge loan debt and a lot of that's coming due now. And they're in not such a good situation. So right now buying is, you can really buy at a good deal at discounts. So that's a good thing. And depending on what asset class you're investing in, like multifamily, what we do, I think it's a great time because there's such a huge housing shortage in the US. People always need a place to live. We look for like more workforce housing, value add properties, not so much the luxury apartment complexes. It's easier to fill and maintain occupancy in that asset class. Recession resistant, people always need a place to live. So the market in general, I think it's a good time for real estate. But, like they say too, I think it doesn't really matter as long as you're smart about it. And it's kind of a long game, right? It's not like day trading or anything. You're buying property in real estate and you're holding it usually for an amount of time.
Not a very liquid asset.
Right.
So you said earlier, think about what markets you want to be into. And I'm hoping we can elaborate for some people that, does that mean like what towns we want to invest in? Does it mean a certain asset class? Like, can you just elaborate on what you mean by thinking about what markets you want to be in?
Sure. So, we look for markets that are showing more growth, income-wise, the population, diverse economic opportunities or employment opportunities. So those are the markets we're looking for. Low crime, good schools. Those are the things you want to look for. So those are the markets that we look at. So we're not just local. There's some people that say, I just want to stay local. I want to be in the state that I'm in, whatever, which is fine. We'll go anywhere, wherever the market is good and it shows favorable conditions for continued growth.
Yeah, well, I would think that's a benefit of the syndications as it is, right? I mean, if you're the landlord or you're the flipper, I mean, it has to be local. Like you have to be able to drive there and check on it and work on it or whatever. But with the syndication, I mean, with a good process and team and making sure it's all being done right, who cares if it's, in next town over, next state over or whatever.
Right. Yeah. I mean, that's our job. Like, we'll do that. We fly to our properties. One partner's in California. My other partner's in Florida. I have a partner in Illinois. I'm in Wisconsin. We're kind of all over, but we travel and we go to our properties and we have regular calls and Zoom meetings with our property managers as well. So we're always, we always have an eye on the property basically at all times.
Right. Your job, not the investors.
Right. Yep.
Awesome.
Yeah. And that's where the trust factor has to come in, right? You have to know that they're handling what they should be handling.
Exactly. Before we sign off, do you have any other final advice maybe you want to share with the community or anything we might have missed?
I know when we had talked in the past, you had asked me a little bit about accreditation and investors, different types of investors and accreditation. And if you want me to talk a little bit about that.
Yeah, I only first learned about that just I think in the last couple of years. So there's bound to be another person out there or two that don't know quite what does that mean? Accredited investor? Do I need to be one? What is it?
Yeah. So an accredited investor, not everyone has to be an accredited investor to invest in syndications. There's accredited investors and non-accredited. An accredited investor is someone who has $1 million or more net worth, not including their primary residence, or they make $200,000 a year the past 2 years and predicted in the future, in the upcoming year as a single person, or $300,000 a year as a married couple. So that would be an accredited investor. So there's certain offerings or deals, if you will, that you can invest in as an accredited investor. There are also deals for non-accredited investors, but we do have to have a prior relationship with those non-accredited investors in order for them to invest in our deals, if that makes sense.
It does. It does.
Yeah. So like if I know someone is non-accredited, I want to establish some sort of a relationship with them, some sort of contact with them before we get an offering for non-accredited investors. So that once we get an offering for non-accredited investors, we can bring that to that person so they have an opportunity.
It makes sense. Yeah, it pays to not wait till the last minute to see if there's an opportunity out there.
Yeah, right. Yeah, if it's something that someone is really interested in, reach out to me, or if you know other syndicators, whatever, whoever it might be, reach out and establish some connections that way so that you can have access to all of those opportunities.
And speaking of which, what is the best way for people to maybe just connect with you or learn more if they want to?
Sure. So our website is, and the company is Ascend Equity, and website is ascendequitygrp.com. You can also email me. It's simple, kategress@gmail.com, or connect on LinkedIn with us.
Fantastic. And we'll put those links in the show notes as well.
And also, if anyone is interested in learning more about passive investing, they can reach out to me. Also, I think I gave you the link I have a great ebook on passive investing so they can learn more too.
Yes, you did. And we will definitely be including links to not just the website and, the socials, but also that free passive income playbook, because I'm sure other people out there are going to at least take a look at that and learn something. I did. We'll put those in the show notes, in case anyone wants to take a closer look at that or the other things we talked about today. They can just do that by going to chiropracticeinsights.com. And I just want to thank you so much for sharing your insights with us today, Dr. Kate.
Yeah, thank you so much for having me. It was good, and I'm happy to share.
All right. Appreciate it so much. Thank you.
All right. Thanks.